Hello traders, welcome to your daily market update for Thursday the 5th of March 2015, and we are hours away, or quite a few hours, but still hours away from the ECB delivering its policy on quantitative easing moving forward, and that's what the market's anticipating. However, the euro jumped the gun and started pricing this in yesterday, as I mentioned in the fundamental video. Make sure you watch that, as it will definitely shed some light on why the price action's been the way that it has. If we have a look now, we seem to have appeared to have developed a double top here on the New Zealand versus the US daily chart that we've been monitoring it for a fair while now, and it looks like that resistance is going to hold, and we have a very strong bearish engulfing daily candle, and this uptrend looks like it's going to be breached and we're going to move to the downside. So I am going to put out at some stage tonight a bearish trade, a short selling trade for this, and I'll be putting my stop losses up here, and I'll be taking this for the longer term. Likewise on the Australian dollar, however, it hasn't been quite as bearish, but we had an indecision candle, and I think we'll have a bearish one here, and this will be a falling star pattern on the daily. The uptrend will be broken, and this downtrend will continue, and I think that there'll be money to be made to the short side. Once again, the stop losses will be up here, and I'll be taking it for a few hundred pips. It's a longer term trade, been stalking these things for a while, obviously, and I think we're getting close to the opportunity to pounce on that, and our patience will be rewarded. So that's where I'm at with those two currency pairs, and it's just purely because money is flowing into the US dollar, as US dollar is a safe haven. And these volatile times leading up into the ECB, non-farm payrolls, everybody's looking for a safe haven right now, and the US economy is definitely that over the Aussie, New Zealand and others. Now the Great British Pound, I've been, like I said in the fundamental video, very surprised at the enormity of this fall last night. Yes, we've had the breakout of the wedge, and it is quite normal to expect it to go lower, but I was just surprised that we only had one piece of weak data coming out of the pound, and it wasn't a disaster. Yet this major support level that we had through here just got smashed, and it kept going, and now we're making a run for $1.52. Now whether $1.52 holds or not, I think the pound could actually get hurt by the euro. It could pull it down, just due to its geographical location, not because of the UK economy is bad at all. And I think we're going to have a non-event there tonight. All they're going to do is keep rates on hold, and not a lot in the future. There's no press release, so there's not going to be too much going on in the future announcements of the UK and whether they're going to raise rates. So it will be a non-event, and then everybody will turn to the Eurozone. And if the Eurozone, as I mentioned, we're now at 11-year lows. If I go to like a monthly chart, you'll just look at this fall here. That's quite impressive, and we are looking there at 3,000 pips and counting. But it looks like it's set to continue, and this fall started, and then we had a consolidation, and then as soon as we hit the US session, it just continued again, and that's the market. And I didn't pick up on it, and I did apologise in the fundamental video, because I did have a note to say that, you know, I need to keep an eye out for the market to actually start pricing in. The enormity of quantitative easing hasn't been in the press, and the market hasn't started going, hang on, they're going to be buying $60 billion of bonds, and 8% of bonds, and $60 billion a month of debt up until September 2016 at the minimum, and that's quite huge. So the market last night realised, well, hang on, tomorrow they're going to initiate that at some stage in March, whether it's early, mid or late, and they got a head start in the selling, and people jumped out of the Eurozone, bond markets reacted, and it was an early move that I didn't identify, and it's going to make it hard for us to trade it now. That was an hourly. If I go back to the daily, it's going to be hard to find an entry, and we're sort of catching a falling sword, so to speak, but yeah, I think we might be able to do a run to $1.10. So if it runs down here with some conviction, we could get in and then get out. It's hard. It's going to be a hard one. I don't like the position that I've put ourselves in, where we're trying to catch a falling sword. But we'll see how it goes. Depends on the news. It's all to do with the details. The market's looking at the details. So we might have to look at other opportunities there, like on the Aussie and the New Zealand. Maybe they're the higher probability trades, and that's what we're after, the high probability. Yes, this is going to move more pips and get quite volatile. We've already seen some movement, so it won't be quite as large as what it would have been, but it's just hard. And I don't have any suggestions right now, so I'd rather not put anything forward. The US CAD came off due to the Canadian economy, or combination. The Canadian economy has all of a sudden gone from cutting rates to now saying that we're in a neutral stance, and that was quite bullish for the CAD. It drove the US dollar lower a little bit. It would have gone and broken through here, but we had US dollar strength as well at the same time. So they were sort of fighting each other, and it limited the falls. But we are here. I don't think it's going to break out until non-farm payroll, so there's nothing there tonight. And we had a little bit of a pullback in a consolidation on the US JAP, and that US dollar strength I think is going to kick in, and we're going to continue going long here. So there's potentially an opportunity for you to look to get in, as we had the pullback, and this area here is obviously acting as support. So you could buy an order and hold it for the long term and expect the US dollar to rally. And then if we get up a few pips, you could raise your stop loss to your entry and then run it risk-free going into non-farm payrolls. And should we get a strong result there, I'll have more details on non-farm payrolls tomorrow, and you can make a decision whether you would take profit and then wait for the news and go again, or whether you just hold the position risk-free and then hopefully you're just basically gambling then and hoping that comes in strong. So I'll see how all that sort of pans out. So there we are with the US versus the JAP. Now, I mentioned on Twitter, I put out 2 trades. The Euro versus the CAD. Obviously the Euro tanked last night. It's a 4-hourly chart. Took out the lows. That's where I put the breakout trade entry. And also we had the Canadian stronger than even I expected. And we had some pretty large moves. Likewise in the breakout of this low here, and it smashed straight through it. And I had sort of a take profit before here. And it just all fell into line where the pound was weak, where the CAD was extraordinarily strong just due to their announcement, and we had a very good breakout. Now, this could continue tonight, so this could be, the CAD's still going to remain a strong currency tonight, so you can continue to trade the breakout to the lows. Maybe we'll have a little bit of a pullback and you could swing trade it. So might be some opportunities later on in the session. We'll have to wait and see. I think the euro is going to remain under pressure all night. I don't see it doing anything great until we get to the press conference and things start to get a little wild. Be careful of spreads widening in that as well, because that's something that can catch people out. This is oil. It's very much pointing to, we've just grinded out a bottom in oil. And I know that's not a currency, but it's just something that I thought I'd mention. I trade oil and gold, not just currencies. And if you do too, we've got a firm support here and we've bounced off it. And this seems to be a typical swing trade where the market's come up, had a pullback, bounced off it, and now looking for the next extension. So there's potentially an opportunity there for you to go long on oil, put your stop loss under here and hold it for a while. Take some profit up in here and make some good returns. It does seem like oil's bounced. All right, that's my thoughts for today. Trade well. Keep an eye on Twitter. I'll be posting some information out, and hopefully we can pick up some pips together. And until tomorrow, trade well.